Chevron to take $11 billion write-down amid weak gas prices. U.S. natural gas futures prices have fallen this year, a result of a surplus of the fossil fuel. Chevron Corporation IW504 expects to write down as much as $11 billion in the fourth quarter, more than half of it from its Appalachia natural gas assets after a slump in prices. The U.S. oil major is considering the sale of shale gas holdings, according to a statement Tuesday. The company said separately it intends to exit its stake in the Kitimat liquefied natural gas project in Canada. And Chevron also plans to keep its 2020 capital budget at $20 billion, the third consecutive year it hasn't boosted spending. The company's actions come from a chief executive officer, Mike Wirth, whose mantra has been capital discipline. Wirth earlier this year earned $1 billion for the company by walking away from a bidding war for Anadarko Petroleum Corporation. San Ramon, California-based Chevron is the best performer among the 5 Western oil majors this year, but it has faced mounting costs at its Tengiz project in Kazakhstan. The Appalachia write-down should be baked in, but the others are incrementally negative for the stock, said Mohammed Ghulam, a Houston-based analyst at Raymond James & Associates. I would expect most companies to have to write down gas assets this year. Chevron follows Schlumberger Limited and Repsol SA in ascribing a lower value to their assets at a time when the growing adoption of cleaner energy stokes speculation that demand for fossil fuels may peak in a few years, while supplies keep rising. The oil services giant posted a $12.7 billion write-down in October, while the Spanish producer took $5.3 billion off its balance sheet last week. Chevron's shares dropped 0.5% to $117.35 at 8:22 a.m. in pre-market trading in New York. They are up about 8% for the year. The gas glut is particularly pronounced in North America where shale production is flooding local markets. Wirth said his decision to walk away from certain gas assets illustrates the company's discipline in protecting shareholder funds. The best use of our capital is investing in our most advantaged assets, Wirth said in the statement. With capital discipline and a conservative outlook comes the responsibility to make the tough choices necessary to deliver higher cash returns to our shareholders over the long term. Wirth has made crude production from the Permian Basin a centerpiece of his global strategy, with a budget of $4 billion for the shale play next year. The giant Tengiz joint venture in the Caspian Sea, whose total cost has surged to about $45 billion, will receive $3.75 billion from Chevron in 2020. For more on this story, visit the news article link.